Hello everyone, welcome to the episode 4 of our podcast Investrek. I'm your host Abdullah Al Rezwan. Today we'll talk to a career banker, Mr. Ahmed Rashid Joy. Let's start our discussion. Joy bhai, welcome to our show Investrek. It's been real pleasure to have you in our show. I, being the host, usually introduce our guest in the show, but today I would like to change that. And why don't you introduce yourself to our listeners? Just give us a brief peek to your career and what you do, what you have done so far in your career.
Thanks, Fuad. It's nice to be here. I Let me start with my educational background. I did my master's in bank management from BIBM, and I was a student of first batch, and I completed that in 1998. And then I joined Eastern Bank in the year 99, 1st February, as the management training officer. And I started my career with Eastern Bank, EBL. I was placed in the credit risk management. I worked there for around 6.5 years. After that, I wanted to change my, job and do something new. So I decided to become the head of retail credit and collection. In Eastern Bank, the designation was head of CFC, Consumer Finance Center. So I worked there for 3 years, and then I realized that almost 10 years I have spent my career in credit risk, in corporate credit and retail credit and SME credit. So I decided to change and join in the front end job in SME banking. So at that time there was a vacancy in the position of head of medium business in SME. So I decided to join in that one. So I worked in that position for 2.5 years, and at last I was the vice president at Eastern Bank. And after having 12 years and 8 months of career with Eastern Bank, I decided to join IFC in the access to finance department as the financial market specialist. So I worked in IFC for around 3 years. I had a couple of projects to work with. I was in the advisory services. So the biggest project I had was the BD SME banking, which was a above $2 million project. It was a sectoral project. We used to work with many banks and the central bank on SME banking. I also had one project on the GIIF, which is the Global Index-Based Insurance Facility. That's on the weather index-based product. So I was also project lead of that. I was a project lead of
I think that has been implemented
by Green Delta.
by Green Delta, right?
At IFC, we just did a scoping study whether that can be done or not in Bangladesh.
I see.
So that was a great exposure for me because I understood the insurance market as well as this product is a sophisticated product. This is not a conventional insurance product. So that was a good exposure. I also had these projects on BRAC Bank, on SME banking, with Eastern Bank on SME banking, and there are a couple of more projects I had. Like I did one study on the deposit mobilization for RMG workers with my colleagues Noreen out there. So after 3 years,
You mean deposit mobilization?
for the RMG workers, I did an interesting piece there. Is that I did a pilot program with Epic Garments and Eastern Bank, and that happened 4 years back, I think, or 5 years back. That the garments worker will get salary through their debit card, prepaid card, not debit card.
Okay.
So prepaid card is the one you don't need to have a bank account.
Right.
So there was a system in the core banking that in the Excel sheets, a garments factory will send the list of 500 workers with their prepaid card numbers and the amount of their salary. They will calculate that based on their overtimes and regular salary. They will send that Excel sheet to the bank. Bank will upload that Excel sheet in the card system. And in 500 prepaid card, the amount will be routed. So imagine
Through the formal financial system.
No, I mean the prepaid card holders are the card holders of Eastern Bank.
Right.
So these workers will, the amount will be loaded in their prepaid card. Now they will draw that money from the ATM machines. That was a point of challenge. I mean, how the workers will draw money from ATM. So the Epic governments decided that Eastern Bank will set up 2-3 exclusive ATM machines there, and their workers will. And there was a financial literacy program by IDLC and Eastern Bank on how to draw this amount, giving training to the workers, how they will use the ATM, put the PIN numbers. So there was a pilot program done. Now imagine, this is very important. Now I came to know that bKash is doing this. Now why this is important? You know, everyday garments workers, they have, I mean the garments office, their finance department needs to bring a lot of cash in different denominations, and then distribute those, you know, to the workers in queues. So life would have been easier if they could, you know, upload the entire amount in the card system.
Right.
Or as now bKash is thinking, in the bKash amount. So that was the interesting pilot I did. So
did the companies, I mean, afterwards, after the pilot project was done, did you see more adoption of this model by R&D
No,
companies?
unfortunately it didn't scale up. It didn't scale up because of the fact that it was difficult for the government workers to use that plastic thing, you know, draw from ATM machines and in denominations. Like they would love to draw 5,265 taka.
Right.
But in the ATM machine you can draw only 5,000 taka. So we also planned that these 265 taka will be kept as a deposit. But then again, you know, this is a cultural issue. I mean, this will not happen over time. And it didn't click. Maybe because of the convenience, or maybe because other corporates didn't want to see this happen. Because in that case, you have to, you know, install a couple of ATM machines in the premises. There will be long queue in the ATMs. Reloading of cash in the ATMs is one issue.
A lot of operational complexities.
Yeah, but that is happening now. As bKash, I came to know, because for bKash it's much easy. You don't need to have ATM machines.
Right.
So all you need to have on sale.
So probably the idea was right, but the execution through the formal banking system was probably the most convenient one for the customers.
One interesting thing I learned that time is that these government workers, they, you know, they kept their money with the hotel owners in their locality. This is a peculiar thing I didn't know. It came out of the survey.
Very interesting.
Where do you store your money? Under your pillow or what? They said no, with the hotel owners. We buy sometimes food from them, and we keep the change with them for the month. And then they remit the money. At that time they used to remit not through bKash but in other channels.
I see.
So, but I am very much upbeat about the bKash model. I think it's going to click. It's definitely going to work. And this will help not only the governments, also the banks. They will be relieved from the huge cash management process.
Right.
See, it's a huge process, you know. I came to know that HSBC almost remits 100 crore taka of cash to different governments for this salary purpose, wages purpose. That will be gone out. And you know, these operational things, calculating their, you know, pay slips, different denominations, these are huge things. So that will happen in Bangladesh.
So now you are the head of SME in IDLC Finance, which many would find, you know, probably a bit strange that you have come from the banking sector to join NBFI sector, a trend that we don't usually see, probably haven't seen or don't see even nowadays. So would you please elaborate the thought process behind the transition?
All right. Just to let you know that after IFC, I worked in the Mutual Trust Bank as head of SME and executive vice president for 1 year only. And then, you know, we actually know who is who in SME in Bangladesh.
Right.
During my tenure in EBL or in IFC or in Mutual Trust Bank, the top runners are the Black Bank, you know, the IDLC, the EBL, and the Standard Chartered Bank. City was also there. They're not now in that space so strongly. So I knew that I had the opportunity, that the position is vacant in IDLC. Now I thought that for a while, but the thought process was only for 1 minute. I mean, I'm an unorthodox type of man, so I see the opportunity where I can work more.
Right.
So only in that sense I knew that I can, since I was also the beginning the project lead of IDLC from IFC, so I knew a lot about IDLC, what they're doing in SME banking. So I wanted to work at my will and do a lot of new things, which I realized that in IDLC only I can do that, not in
Okay.
many places. And IDLC was this forerunner in the SME. I mean, they were compared with Bragg Bank and other banks. So that was the main thing.
Right. So there are essentially three segments that Bangladeshi banks and NBFIs can target, which is corporate, retail, and SME. What do you think is a more attractive segment of these three, and why?
Definitely, the SME is the most attractive. Now, when a banker will say attractive, it's based on the money you earn or the return you get from that segment.
Right.
Now, if you look at the global banks in SME banking and retail and corporate, the return on equity is much higher in SME banking. And you also know that the margins are very low in the corporate.
Right.
In retail, it's the same thing. But still in SME banking, you can make much money. So that's one
It's
of
also more expensive. Your OPEX is higher in SME, right?
yeah, even after adjustment of that OPEX, you can generate more.
Right.
So the main attraction is one, the return on equity to me. The second attraction is that if you want to do something inclusive, the SME is the right place. Now, what is inclusive? The inclusive banking is, I mean, banking with the unbanked.
Right.
And onboarding the underserved or the, not served customers in credit, those who don't have access to finance. So these are the two aspects. One is the fundamental thing, return on equity as a banker, that's the foremost thing. Second is the sentimental thing.
Right. It sounds like a win-win thing. The bank gets benefited, and the underserved also
Yeah,
gets
you're doing
benefited.
something which is impactful,
Right.
when you do in the SME banking.
Right.
So that's my perspective. Why among these three, I prefer SME is the most attractive. But definitely number one is the return thing. That should be the number one. And if you can't earn money, make money, and then you want to, onboard the underserved, that will not make sense in a sustainable way.
Do you have any target ROE in mind, or it varies with the total ROE of the bank or NBFI is generating? Do you have any fixed ROE in mind, like 20-25%, or it varies whether the parent company is generating, let's say, 15%, and you think that, okay, if I generate 16-17% higher than the ROE is generated by the parent company, you should be happy.
Now I have a one thing in mind. Since I worked in IFC, I know the best in class SME banks in globally. Their average ROE is 23 to 24%.
I see.
So that's the figure I have in my mind. But
That's across countries, not just within the
globally.
country. Globally, right?
Now, when you are operating in Bangladesh and if your parent company is making ROE of 15%, you should be happy with 20%. But also keep in mind that you have more efficiency, space for efficiency to grow and make it 24%.
To reach the best in class.
Best in class.
Right.
So I always set that as a target. It should be the best in class.
Okay.
But definitely SME ROE should be much higher than the parent company ROE or the other business segments. Otherwise, you are wasting your time doing SME banking business. If your ROE is the same as 14-15% at par with the corporate level, then you are not doing the proper SME thing.
Right. Could you just briefly elaborate the whole process from customer acquisition to loan repayment? How do you target your customers, reach and sell your products, and then later maintain a relationship with the customer during repayment stage?
Okay, we have a strong sales force of around 275 people. They are the feet on street. Now, we have 25 branches. That's our distribution point. So they do survey on daily basis. They visit around 6 to 8 customers, and when they find, and they keep on visiting and knocking each customers daily basis. They keep on their in their diaries of their information. Then out of maybe 6 or 8, they might find one potential, and who is also interested to know. In that case, they take their senior sales team manager with them, because that's the flashpoint. So when this STM, the sales team manager, visits with him and finds that this businessman is bankable, then they start the process of making proposals. And when the proposal is done, our unique model is that our credit risk team visits each and every customer, which is very unique.
Every customer in SME segment.
In SME segments, each of
that has to be
customer.
very challenging.
That's very challenging, but that's what we have, how we have differentiated.
But you have to keep a larger team to do that, right?
Yeah, we have a larger team of credit on that, but that's the fundamental reason why our NPL is low. I have seen other banks where I have worked also, that SME credit are done on paperwork. I mean, these are PPG strictly. So you will just see the bank transactions and other papers and give it approval. And now that has spoiled their credit a bit, because when the business people get smart, they just, instead of focusing on business doing fantastically, they focus on how to make papers fantastically.
Right.
That has happened.
Right. So you can game the papers.
Exactly. So that has happened, and that has killed and spoiled the market a bit. But since our credit team visits each customers, they could see the real so we approved a credit after that visit from the credit risk team. And then the unique thing is that we collect money through post-dated checks. We don't have CASA accounts like banks have.
Right.
So that's the challenging part. Each month our operations team handles with 26,000 checks. And this is a big operational job,
Right.
cash management job. Each month they have to bring out all these checks and collect money through PDCs. But we do
What is a PDC?
post-dated checks.
Right.
Okay. So when we give loan for 3 years, we take 36 checks from the borrower, and each month we send those checks for collection, and that's how we do collections. That's different, because the banks have the CASA account. They take the installment from the amount deposited in their CASA. That's more easy.
Right.
But we do one thing, is that we proactively call our customers beforehand, just before the EMI due date.
Even though they are regular.
They're regular
borrowers.
Imagine a second EMI is coming on 20th June.
Right.
So they have to have that adequate amount in their bank account, so that our PDC is cleared. So our central call center, we have one call monitoring team. They call each customers and they said, "Sir, look, you have another EMI coming on 20th June. So I hope you will keep adequate amount in your bank account."
You do that for every single borrower in SME?
Every single borrower in SME. So what happens is that these borrowers, they proactively then keep that amount, adequate amount, and when we release the PDC, the check, the amount gets cleared.
Right.
So this is how we strongly monitor our account. Also, our RM team at different branches, they also knock our customer in case a PDC is missed or dishonored, and they collect the cash and deposit it, ask the borrower to deposit in the our escrow accounts.
Right.
With different banks. So this is how we do the collections.
Okay. Do you think access to finance has improved over the years in Bangladesh? You mentioned that you worked in IFC on this particular topic, so it would be great to have your opinion on that. And what are the usual characteristics of SMEs that receive financing from your organization, and what are the characteristics of those who don't receive financing in IDLC?
Okay, on access to finance, a lot has been done in the last from 2009 when the previous governor, Dr. Atiur Rahman, who he worked a lot on the SME front and in others like women entrepreneurs or for the farmers, and he has done a lot on the uh, inclusive banking. So at that time, I remember the SME credit percentage to total private sector credit was 15%.
Now it's 25%.
Now it's 25%. Now, last month I attended a meeting with World Bank, and who said, given the LDC status that we have, that 25% is higher, because in other LDCs or lower middle income countries, the SME credit is around 20% to total private sector credit. But you can see in our case that has above the benchmark.
Right.
And I really appreciate.
It's a good thing, right?
It's a
that
good
access to finance has improved a lot over the years.
Yeah, some of them might not have like the 10 taka accounts, but what he has done is that he has changed the mindset of the bankers. Previously, because as the Director General of BIBM, Dr. Tawfiq Ahmed said once, that SME financing is like an economic movement.
Right.
Okay.
It is.
It is. So Dr. Atiur Rahman was very highly instrumental to that movement. He has arranged these road shows, SME fairs, the matchmaking things a lot throughout the year and decade. So that has taken this SME credit share to around 25%. Now,
do you think that the definition of SMEs, the definition of SMEs vary quite a lot from country to country. Do you think our definition is quite wide in terms of the range of the number of employees that the SMEs employ, or the range of revenues to be considered as SME? Do you think our definition is too wide compared to other countries?
No, it's not too wide. Like if you see the IFC's or World Bank publication, you will see the definition of SMEs from Europe, America, and other countries. What we are doing presently is we are following the definition of RBI, Reserve Bank of India. We are not, copying the definition, but our definition that we follow, which is two-dimensional definition. One is the number of employees, another is the fixed assets excluding land and building.
I see.
We are following this two-dimensional definition. I would like to ask more. Like I would like to include the third definition, which is the turnover.
Right, revenue.
Now, which we have in Europe, but again, this is difficult to club a borrower in small or medium in terms of turnover, because we don't get the actual turnover things.
Right.
But we can start it now. Maybe in next 5 years we might be getting the actual numbers. The fourth definition, the fourth dimension that can be added is the proxy loan amount. Now, what is this proxy loan amount? If you give this amount of loan to a borrower, that borrower will be called as a small or medium. Now, this might sound weird, because if you give, from prime finance only 1 crore taka loan to a big corporate like Apex Footwear, in that sense, that Apex Footwear will be termed as a small borrower. But
right.
That's not. But this, as I said, this is the fourth dimension I'm requesting for or asking for, so that you have multiple checkpoints.
Okay.
So one dimension is the number of employees, then the fixed assets, the turnover, and the proxy loan amount. Okay. So it can be widened more, and the more matured the market will be, the definition needs to be wider, and which will cover all the aspects.
So access to finance has really improved in last.
Definitely. The numbers, but the positive thing is that we are what we have seen data globally. The developed countries, 60% of their credit is to 60 to 80% is to SMEs.
Right.
So there is a positive correlation. Higher the economy, more developed the economy, the higher will be the SME credit ratio.
Right.
So since we are now the lower middle income countries, we will move to higher middle income countries and then move on. This 25% ratio will go on, will increase a lot.
Right. In fact, today's SME can be tomorrow's large corporate.
Definitely.
Right. Okay. And I also asked, what are the usual characteristics of SMEs that receive financing or funding from your organization?
These are nothing.
or the characteristics that don't get the financing?
There is nothing new here. Like we follow the simple rules of the creditworthiness. Like how is the business going on? We see the credit records and his books of accounts and sales, and based on that we give them credit. Those who don't get credit from us maybe primarily because of their bad credit record,
Okay.
and maybe they are not too much engaged with the banking system. Maybe they don't do frequently transactions,
So they're probably dealing with more cash
more
transactions.
cash transactions.
Okay.
So these are the main criteria.
We have heard it probably multiple of times. I'm pretty sure you have heard it too. The quality of financial statements in Bangladesh is quite poor, even for the large corporates, and for SMEs, it goes without saying that the quality is probably even poorer. In fact, probably most SMEs do not have any formal financial statements. How do you deal with such a challenge?
Okay, this challenge, when I worked in IFC, I found it everywhere. This is happening in Pakistan. If you go, the same thing in Africa or in India, same thing. You will find that SMEs don't have the proper financial statement. But I believe it's the obligation of the banker to facilitate that, to help the borrower to make the financial statement. I mean, you have. Uh, when I was in Eastern Bank, I attended one course and the instructor was from Philippines. And the title of the course was Reconstructing the Financial Statement of Borrowers. Now you have all the information from the borrower. You have to reconstruct the financial statement. You can visit and see the stock amount. Then you can check his receivables book and see what's the receivable amount. Now you're getting the asset things. Then you know his fixed assets, what he has, and you can see from the CIB what liability he has, and what are the accounts payable and other things. So you can easily draw the balance sheet. Similarly, you can also work on the income statement thing. So it is our credit team who facilitates our business team to get the financials of the borrower, to facilitate them to make it. So you will not get the financial statement in a sophisticated form,
Right.
as you get in corporates, but you have all the informations. You have to the just connect the dots and put that information in a financial statement format.
Right.
Even when I worked in IFC, I saw that the African Standard Bank, they have developed a software through which they input the bank statement of the borrower. I mean all the transactions from a bank statement, and the software with some correlations prepare an income statement for the borrower.
It's the Standard Bank,
The Standard
South
Bank.
African Bank, I think.
Yeah. So there are many ways this are being done globally. So in Bangladesh also we do that, but we do that in a more in an engaging manner, getting information from the borrower and clubbing them together.
I see. It's quite interesting. I mean, that's probably the question that many of us had actually. How do you? It's pretty obvious that SMEs wouldn't have these formal financial statements. It's very difficult to expect actually to SMEs have these kind of statements, and it's quite enlightening for us to actually understand how the banks and NBFIs engage them in an inclusive manner to finally come up with the formal financial statements that you would need to.
I would
provide the
like to
financing.
add one thing. I mean, on October 2015, I attended the SME Finance Forum conference in Beijing, which is a IFC's organization. And there I found that the Chinese bankers or the financing companies, they are gathering data from 8 sources on a borrower. And
which sources?
From 8 different
sources.
Okay. From their e-commerce transactions, from their credit card transactions, bank statement, from their Facebook.
Yeah.
They're drawing.
What sort of data they would gather from Facebook?
I mean, these are like from Facebook, the data that you get will be like a psychometric score for the borrower. You heard about this psychometric
Right.
score that
Mhm.
was done by Entrepreneur Finance Lab of the Harvard
Mhm.
team, which was awarded by the G20. Now, which will tell whether a person is a good human being or a bad human being,
I see.
not as a rich person or a bad person. So, uh, like those institutions, they derive data from the Facebook just to get the psychometric aspects of the borrower. From other platform, even from the mobile phone, the data they get, they can derive your income. These are being done globally now. I
Mhm.
mean, if you talk this much and spend this much amount in data and in voice,
Mhm.
the telcos can tell you that your potential monthly income is this much. And the telco, like if you are a subscriber to Grameenphone, the Grameenphone, by analyzing your last 4 years monthly billing pattern
Mhm.
and the amount of flexi load you do at what frequency, they can derive your monthly income without knowing how much salary you are getting
Right.
or from which bank account you're doing transactions. So there are a lot of innovative things appearing in the globe.
Right.
So
I mean, whenever people hear the term banking, many people would probably think it as boring and non-innovative place for the people. But I'm pretty sure a lot of our listeners, including me, are getting the sense that uh, the banking sector is probably ripe for innovation going forward. And the role of fintech that we have already uh, seeing every day, every now and then, fintech is probably changing and will continue to change the banking industry in the next few years. And the factors that you mentioned, the mobile phones, even the social medias, all of these probably can come into play, and be a one single platform uh, to help us in multiple of ways, through banking, through transfer, probably payment solution, a lot of things that can be done with the help of technology.
definitely, I would recommend you to go through the Accenture report on the GAFA approach of banking, and for also the listeners, audience.
Mm-hmm.
The GAFA, as they describe, is the Google, Amazon, Facebook, and Apple. Now, the banking has to evolve surrounding these fintech, I mean, the
Technology companies.
tech companies.
Right.
Uh, there's no other way we can do it. So that's very important. And there will be a lot of exciting thing happening in the banks. I have a strong interaction with one fintech company. It's in Atlanta based Verde, VERDE,
Mm-hmm.
and they're doing this AI based credit solution, artificial intelligence based credit solution. The chairman of Verde, Patrick, when he said that we can derive data and do this artificial intelligence on credit underwriting, I said, where do you get data in Bangladesh? And he said, you won't believe it. In Bangladesh, at least there are 10,000 data sources that you don't see, but I see.
Mm-hmm.
So he gave me one example is that when I was driving and he was with me, he
Mm.
said, if you get me, he was pointing me towards a BTS of a telco in the Bonani.
Mm.
And he said, you just give me the data of this tower for the last 3 years, nothing else. I will analyze that data and can predict your GDP just from one source of data. Because I will see how much data traffic is increasing,
Mm.
at what frequency, what is the voice data and the other data, and I can predict that. And we have done it in other countries. So there are a lot of things which actually we don't see at this moment but are there and will be shaping our banking industry in the future.
Right. Quite interesting. Uh, what are the industry segments that you are most successful within SME, and which are the industry segments IDLC wasn't very successful in last few years, and why is that the case?
Okay, in the last 3 or 5 years, where we succeeded is the agro-based industry. Now, as you know, that we are the highest recipient of the refinancing fund from Bangladesh Bank, and the agro-based refinancing scheme is one of the largest. So we leverage that fund, and that fund allows to lend borrower at 10% rate,
Subsidized rate.
subsidized rate,
Right.
and we used to borrow at 5% from central bank. So we still had 5% spread but we could penetrate to this agro-based industry.
Which is not very high for SME lending, right? 5% margin.
Not very high, not very low.
Okay.
But there are multiple impacts on this. Like otherwise, we couldn't enter to these borrowers.
I see.
I mean, they are agro-based industry. They used to get fund at 12% from a bank, and if you would otherwise lend to them, our rate would have been 14. So we couldn't penetrate. But with that, leveraging that fund, we could do that. But now, since that fund is almost replenished or exhausted, we are now changing our focus to other segments. So it's like we entered that market, we did very well in that market, and now we are shifting our focus to other markets, because all these markets will not stay with you forever. Women entrepreneur thing, we are also the highest recipient in the Bangladesh. At present, our portfolio is around 3.5 billion taka. We are very good on that. We have a signature product, Purnota, as you know, which is a very much talked product in the financial sector. And these are the main things. Also, we did some with the startups and with some
startups.
Yeah, because the previous governor, he also launched a refinancing fund for the startups. It was worth 100 crore taka. So we had designed a product for the startups. We started doing that, but
so it is yet to be launched.
It was launched.
Okay.
It was launched. We have named it as Shuchona, and we financed a couple, but not at a larger extent that we did for the women entrepreneurs or the agro-based, because it's really difficult financing the startups by the typical financing mode.
Of course. Okay.
And also we have another product for the software engineers or the IT firms, which we call Udbhavan, and we have designed this product collaborating with BASIS, the Bangladesh Software Industries Associations. So we are also financing that aspects. These are the specialized area we are doing.
And what are some of the areas that you weren't as successful as you were in these areas?
I would say in the cluster financing we were not, because while we talk about SME financing, cluster financing is one of the major things that we haven't done pretty good. We have some agreements.
What do you mean by cluster financing?
Now, in any economy, the SME Foundation of Bangladesh, they have defined a clusters. Like there should be at least 50 enterprises within 5-kilometer radius, and the enterprises of similar nature of business.
Okay.
Now, what is that? Say for light engineering.
Okay.
If you go in the old Dhaka, you will see all the light engineering enterprises are in the same area. That's a cluster.
Okay.
So they have set some parameters, 50 at least or 5-kilometer radius. If you go to the Rajshahi, you will find one, this Nokshikata cluster. Or if you go to Rangpur, you will find that another cluster. The cricket bat or the sports instrument cluster in Joshore. The Shutki cluster in Sylhet or Cox's Bazar.
Right.
The salt cluster in Teknaf. There's several clusters.
So if you think that particular segment, particular business industry has the potential, you would go into that particular area and finance probably most of the businesses that are out there.
If not most, half of the businesses. So that's a cluster approach of financing in SME.
And it's pretty much common in other countries.
It's pretty much common in China and in India as well. But here we didn't do that well. Maybe because our distribution channel is very few. And in a structured financing, cluster financing, you have to move in a structured approach. Like you have to do a MOU with the SME Foundation. They will back up you. You will do some literacy program in that cluster. Then find out the borrowers, design a product, and then finance. That should be the structured approach. We did couple of plastic manufacturing industries in the old Dhaka. We did that cluster financing with the SME Foundation.
I see.
But in future, I want to do that in a larger scale. Like there are some clusters in Hobiganj or in Mymensingh on these agro machine tools,
Right.
They make these, the langurs, things, automated small agri machine tools. and they do it, manufacture these in clusters. So I want to explore more because these are the things where you will have impact, real impact. You're doing something.
Right.
So that cluster financing I would like to focus on.
Right. There has been, I would say, uh, allegation for the banks and NBFIs in general, that the lending rate that is applicable for SMEs is too high for the borrowers. That it would probably even the the borrowing amount even harm them because of the high interest rate that are being charged on that loans. So do you think it is too high for the borrowers?
Before that, I'd like to state you one thing is that even 10 years back, SMEs were treated as a normal account number with the bank. And the bankers who used to finance SMEs didn't entertain with the relationship management concept. Later on, that SME will take a loan from you and he's not coming to your bank at all, and he will be just repaying the loans.
Okay.
Non-relationship, functions. SMEs didn't have access to sit with the branch managers and sit in the bank. But a decade back, it changed. SMEs now, a decade back, they wanted relationship. They wanted to pay a higher amount for this relationship. So
Interesting.
that has psychologically changed the financial sectors across the globe.
Service itself has a value to them.
As a value to them. They don't want to be treated as a normal account number. So SMEs are willing to pay a higher price for the relationship. This is one. Secondly is that SMEs are, to me, price inelastic. You finance them the right amount at the right time, they are very much willing to pay a higher amount. Okay. Imagine in Bangladesh, what are the alternative sources they have to avail financing? They have this Mahajan, the loan sharks from 50 to 60% rate. Then they have the MFIs who are charging 25%.
25, right.
And the banks, the larger banks, they won't have this access to enter, who will charge less, but they don't have the access. So in that sense, 15 to 16% or 14 to 16%, I think it's okay given the supervision cost that we have on SMEs. As I told you, we have to collect through PDCs around 13,000 SME borrowers, and we have to make phone calls to them, visit them frequently. So SME credits are costly.
Right.
But if you can price that risk of SME, then it's fine. They are willing to pay that price.
Okay. How do you decide about the lending rates for the customers? In Bangladesh, what you have seen even nowadays is that they have a set interest rates for the product. Like you have a Purnota product, and the lending rate is exactly similar to all the borrowers, which really doesn't make much sense from financial theoretical perspective, because if my record is much better than the other one, just because I'm taking a Purnota loan doesn't mean I should pay the similar interest rates as other borrowers are paying in that particular segment. How do you decide on lending rates?
Okay, there are two aspects in it. One is that there are certain segment of customers you have to finance at a regulated price, which is the price dictated by the central bank. Like for
Right.
Purnota, it was 10%, now it has gone to 9%. Now
It is regulated by
the central
bank. Oh, I see.
The agri-financing thing, as I said, regulated by the central bank.
I'm definitely asking about the non-regulated one.
Okay. Now, in the non-regulated, the scientific approach of doing this is the risk-based pricing.
Right.
And that risk-based things should come from the sophisticated credit scoring model, and then
Exactly.
you decide on that. You will be happy to know that in IDLC, I have started this for the medium segment borrowers. The pricing should be risk-based. But in small scale, we have obtained a credit scoring model from IFC. With collaboration from IFC. And that credit scoring model, we are undergoing pilot programs, and we are just seeing the outcome of that scores. and next year we will try to price the small business according to the risk profile. So now what we see is that we don't have a scientific approach, but we see the past track records and the competition things, and then we reduce the price or not, and the collaterals they offer. But going forward, we will be following a scientific risk-based pricing model.
That really sounds music to my ears. Great. Uh, Even though corporate spreads have come down a lot in recent times, very few institutions are actually good at SMEs. And so my question is, what is really preventing more banks and NBFIs from being good at SME? Why is it so difficult to to copy your system and probably implement your system in other banks, like they have done in, let's say, corporate banking?
This copying things won't work. Why is that? At first, the senior management must understand. I mean, it should be in their mindset. It should be in their philosophy what they want to do. So if they understand only that SMEs are profitable and let's do it in a structured way, that can be done. But I would like to highlight the banking models in Bangladesh a little bit to address this issue. Other than 4 or 5 banks in Bangladesh, all other banks and FIs are following the geographic matrix, which is the branch banking model.
Right.
Now, in the branch banking model, what you get is that you get the P&L statement of a Gulshan branch or a Elephant Road branch, and you decide, and that's what you know about. But that branch has all segments of customers: corporate, retail, and SMEs. Other than 4 or 5 banks, no other banks can tell you what amount of money they made from SME. They can only tell you the profit of this branch and that branch, or Mominching branch or Chittagong branch.
Right.
Now they don't see clearly how much profitable is SME. I would like to clearly state these things, that most of the bankers in Bangladesh don't understand that SMEs are profitable, and for that matter, they don't do that properly.
If you don't have the data, you wouldn't understand.
You won't understand.
Right.
As I said earlier, right, return on equity for SME is higher, that you should do SME for that purpose. So if you don't know your SME P&L, you will never be able to decide on the strategic things. So, SCDF, the South Asia Enterprise Development Facility, which was a project of IFC, Mr. K. Mahmood Sattar once said that 5 years back, that SCDF did one thing very good in Bangladesh. They taught us how profitable SME banking is. Now, they taught that to the entire market, but only few could grab that. So that's the issue.
Right. I know asset quality is probably the hot topic in the banking sector. I would not delve into the asset quality of the whole banking sector in general. I'm generally more interested in asset quality situation within the SME segment. Whether is it as ominous as it is in the corporate sector, and if it is not, what is the major drivers for the better asset quality within the SME segment?
Okay, now as of December, I think 2016, our national NPL figure appeared, which is 10.35%, something
Right.
around that. Now, since I regularly visit Bangladesh Bank, I have also the SME NPL data of Bangladesh, which is 14%, the NPL. So if you look at with the national 10%, the 14% is
Higher.
and also in line with what we know, SMEs are more risky segments. But again, we have like isolated cases of Standard Chartered Bank, BRAC Bank, or IDLC, or Eastern Bank. Their SME NPL is around 4 to 5%. Our one is around 3%. So that 14% may be happening with some state-owned banks or some first-generation banks. Now, given the national NPL of 10%, if that doesn't come out, the SME NPL ratio won't come out. There's all linked. Again, I was browsing the NPL data of India and Pakistan and Sri Lanka last month, and Indians are now struggling with this NPL issue. Very well. Their NPL ratio is around 8.5%, and Pakistan one is around 14.5%. When I see this regional data, then then it's easy to compare, Otherwise, you would thought that Bangladesh NPL is much higher. Even in Vietnam, the NPL ratio of the state is 8%, but that's understated.
There is a concern that
Our one is might
is
be.
also understated too.
That will happen from China to Vietnam to India everywhere. The bankers will hide some of the NPL things or manage NPL. You know, so
So asset quality is probably at par with the other segments
region,
too.
but we should not be complacent with these things. I mean, 14% is not a sustainable thing.
Exactly. If
NPL.
you have 14% NPL, you will automatically have to charge a lot more to your good borrowers to get to the ROE that you are saying you would want to generate in SME segment, right?
With that benchmark numbers of 14% or the national NPL of 10%, you cannot do SME lending, or the banking thing sustainable way. So the very few banks are doing great, and those who are doing great, their NPL ratio is much below than the national one.
We keep hearing that probably more defaults happen willingly rather than out of business reality, especially in the corporate segment in Bangladesh. Uh, is the situation similar in SME segment too?
You will find similar cases in retail, SME, or corporate. Now, when we analyze,
So this is more of a cultural thing.
no, not more. Let me give you some examples. Like when we analyze the reason of default of different accounts of all the defaulters, we find 75% is for that because of the genuine business reason.
For SME.
For SME, 25% is for the willful
I see.
purpose. So it's not, the majority is not for the willful things.
Okay. So SMEs generally face more tougher business reality than other segments.
Exactly, they do.
Right.
They're more vulnerable to the economic risk and other things, but this has also been proven after the global financial crisis that SMEs could only turn around faster, because
Right.
in that crisis we could see the corporates were almost bankrupt across the globe, but it's actually the SMEs who absorb the shock and turn around the economy from China to America, everywhere.
Exactly. You have mentioned in detail about the role of technology uh, that is playing across the globe, probably in all segments of life, including banking and financial services. Uh, what are IDLC's or your vision in terms of incorporating technology within your SME segment going forward in next 5 years or even more than 5 years?
Yesterday I saw a quote from the newly elected French president Emmanuel Macron,
Yeah.
and he said that France as a nation should think and behave like the startups. So as you said, these things are coming for different corporates. It's not only corporate levels, it's now happening at state level.
State level.
So he wants this French entire society to behave and think like startups. Now this is, I like this statement. This is very much true. In IDLC, we must start thinking and behave like startups. Okay, and we have to do new things. Whatever we do now will be challenged, and we will be wiped out from the market if we do not change, if we do not embrace the technology. We have many plans to do, which
What are some specific areas that you would like to automate or incorporate technology in a more integrated way within your segment?
I would like to do a very old things which has been done by other firms in the last 3 years, is the big data thing.
I see.
So everything will evolve around this big data. Now we have to work a lot on that. For example, our sales force now, as I said, they roam around different markets and different borrowers' premises or business houses and try to explain them. But I believe within maybe after 2 years, the sales will be like data-driven sales force. Our sales force will be analyzing data of different borrowers derived from, as I said, from Grameenphone or from his Facebook or from his, other bank statement, and potentially identify a potential borrower and knock that borrower in
On your own. Yeah.
in his doorsteps. See, even these sales will be data driven sales going forward. So, and like I was reading an article, a 5 minutes loan in Mumbai given. So, and when you hear that a loan is given in 5 minutes, you might think that loan might be spoiled, but that's not the case. Even in China, I saw that they are allowing loans in couple of minutes, because since they have the
For
data
SME loans.
for SME loans, for micro loans, because if you have some strong data, you don't actually need to spend hours on those things. For example, let me give you one thing. I want to give you a $5,000 credit card limit, which is 4 lakhs taka. For a SME, 4 lakhs taka is a big, but to allow you $5,000 credit card limit, what I need to know, your designation and your salary,
Right.
what and your credit record.
Yeah.
So if I get these three information, I can decide in 1 minute.
1 minute.
And I am deciding on 1 minute on the amount of 4 lakhs taka credit.
Right.
So that can also be replicated for the small business borrower if you have the strong data, 360-degree view of the borrower. So that can be done, and that's going to happen in the next couple of years.
Right. I mean, with the emergence of technology, another fear probably comes hand in hand about the fact that whether a lot of people will lose their job because of the technology. You mentioned that you need just probably three information for me to give me a loan of $4,000, and if you can do that, and a lot of bureaucracy will be eliminated and will completely vanish from the process, and with that probably a lot of people will also get out of the job. So does that concern you? It's not. We keep hearing about these things and we think this is a developed market phenomenon, that technology is going to eliminate my job. But from what I've understood from your talk and from what I've read, it's going to pretty much affect us too.
You can see that in this way, or I have a different view, a method of view, is that I'm a strong believer in market economy. The market will determine everything.
Right.
So I see these as the market becoming as more efficient. And when you become more efficient, definitely some people will lose their job. But the market will accommodate these people in other things. Like if I spend now 6 hours to give a loan, and I can do that in 5 minutes, what I will do in the next 5 hours? I can do more jobs in 5 hours. Or I can decide that okay, we don't need so much people. Last month I saw that our spinning industries, they are installing these robo-rotor things.
I see.
So robo-rotors, what they're going to do, they run around that spindles, and they check the inefficiencies, the leakages, the wastages, and the system down that's gone down, when a thread is torn. So they fix those things automatically. Now I see, when you see the robo rotors, I mean, definitely some people are going to lose their job, but you see their efficiency is improving much. So that farm will be generating more profit and more efficient, and he might set up another spindle industry,
which may create even more jobs. Right. Okay. So final question for us is, what do you think the government can do to encourage even more financing in SME segment? What's your expectation from government when it comes to SME financing?
Now see, in the last 10 years, as I stated, the previous governor has done a lot. He has done sort of hand-holding with the banks on SME financing. And that he has done for around 8 years. Now you can't expect these hand-holding things to continue for decades after decades. It's a free market economy. Bankers need to decide. Bankers need to understand that SME are profitable, and they need to seriously do that business. And governments will support with some policy incentives, like the general provision, the classification things, and the capital adequacy requirement, which are all
lenient for SMEs.
And what else you want government to do? I mean, it can't be hand-holding for
So you want the market to do its job.
Market should do it. government should continue with these incentive things and allow the SME financing companies to do business freely. But recently, central bank is also trying to put some ceilings on the spread of SME on SME and other fees. So I would request central bank to review these things and let the market decide on its business.
Right. We have
Other
57 banks in the country,
exactly.
and the competition is pretty fierce within every segment of the business. So I think market should be good enough to play to the competition to play it out, and market should be able to decide what's the right price to ask from the customers.
Exactly, because what should be the alternative? If I find SME banking is not profitable,
You wouldn't do it.
I won't do it. So
Exactly.
those SMEs won't get financing. So that's the large cost is on that side.
Right, right. Javed, thank you so much. It has been a learning experience for myself, and I'm pretty sure many of our listeners would really appreciate hearing such insightful ideas from you. Thank you again.
Thank you so much, Fuad. It was really nice talking to you, and I enjoyed this session. Thank you so much.